Now, the first thing that we need to know is the correct definition of this cooperative society other than SACCO. So, number one, so actually put them in a point, yeah? So, points to note. That is the first item, that when you talk of cooperative society other than SACCOs, that these are cooperative society where members do not save. So, the key thing is members do not save. And also do not get credit or loans. So, and that is now where we say, if that is the society, we call it a SACCO. Now, we are saying example of this are those cooperative society that buy produce from farmers and sell the produce to the customers, usually on behalf of the farmers. So in the process, what they normally do, they act as brokers to buy produce from the farmers and then sell. So in the process of buying and selling brokerage, then they make profit out of that activity. These are the one that you're talking about. So point number two. So point number two is that how do we tax them? We normally tax them at the corporate tax rate of 30%. And that's the reason why we are looking at them under specialized companies. That they are specialized companies. So you get the taxable income, apply the corporation tax rate, that resident. Here we don't talk of non-resident, only for the resident. 30%, you get the tax the cooperative society is supposed to pay. Point number three. Point number two is about the determination of the taxable income, the one that we tax at the rate of 30% to determine the tax to be paid. We are saying this, we normally determine using either the gross profit method or the net profit method. So what we are trying to say is that this we tax them in the same way as other businesses in the determination of the taxable income. So if you are given the net accounting profit, use the net profit method. If no net accounting profit is provided, then automatically use the gross profit method. Point number four that you need to note. Point number four is that when you're taxing this cooperative society, if there is any income the society make from trading with members, that is usually exempted from tax. That means that, for example, we have said for a farmer, they could be having farmers cooperative society. And remember, I'm not mentioning credit and that is saving and credit. We are just talking of cooperative society, farmers cooperative society. Now, in the process of buying produce from the farmers and selling, they can sell to one of the farmer, one of the member. The income they make in that process is usually exempted from tax. We don't usually tax it. Point number five. Another point we are noting is that the dividends and bonuses to members is usually a allowable expense. This is usually contrary to what we said about the taxation of the limited company, because when you look at additional and allowable expense for a limited company, we said any form of dividend is not allowable. And we said even for other businesses, when you pay anything to the owner of the business, it is not allowable. For a company, we call that payment to the owner a dividend. But now when it comes to this cooperative society other than SACCO, it is usually allowable expense. And it is only for this cooperative society other than SACCO. Because when you get to the SACCO, that doesn't apply. Only this cooperative society that are other than SACCOs. Now, this is what you need to know about the taxation of the cooperative societies. Maybe what I can do is to add just one more point, but it's a note. Yeah, so that is an important point that you need to note, that when you're taxing this cooperative society, we tax them in the same way as a limited company, just the way we normally tax a limited company, with the exemption of what we have talked about, especially these 2 points, where income to member is usually not taxable. Dividend and bonuses to member is usually allowable expense, but which is against what we do in the normal company. So that is now the end of the taxation of the cooperative society other than SACCOs.